Yeah.
All right, can you guys hear me okay now? Okay, I'm going to be looking at gold. I'm going to be looking at GBP years. I'm actually focused on GBP pairs. So why you focus on expand? The market is really expanding. A lot of things are happening in the market over the last couple of weeks. And if you are just a day trader, you probably would have been suffering some of the impulsive move of the market and you don't understand why. I'm going to be showing you a lot of a lot of day traders are actually suffering from the impulsive move of the market. So good. We're live on YouTube. So if you guys want to come on my Zoom, all right, what you guys just need to do so you don't miss out on this analysis, because I'm just going to be talking. This is just actually to inform you guys that we're live, Market Mastery Live. I have a couple of things we're going to see. Okay, some analysis are going to trigger on this session. I'm going to call some of the analysis just like I do every week. And I'm going to show you how I look at the market so you guys can have an analysis that'll pay you through the week. There are some high paying analysis that are on right now. Okay. And I'm going to be looking at gold, Euro USD. Likewise, I'm going to be looking at GBP USD. Then, if there is time for us to look at, am I sharing my screen already? Okay, I'm not sharing my screen. So, now before I share, okay, let's just hold on. Okay. So you guys have the opportunity to join on Zoom. How do you do that? It's simple. I think by now I shouldn't be announcing this. Okay. I think by this time I shouldn't be announcing how you join my live session. Should I be doing that? Anybody who's following, except you just following me new. Okay. So on my bio, there is actually a link to my Telegram channel, free Telegram channel, and there's a link to my YouTube. So if you want to join on YouTube, there's a link to my YouTube on my bio. There's a link to my Telegram channel, and inside of my Telegram channel, I put all of this, the link to this live call, so you guys can be part of this. You guys can be part of this call. How you guys doing? All right, so let's just get into the market right now. I don't think I'm gonna. I was actually posting this um, live call, and one of my educators said, Mr. Kemry, are you going live today? You say, oh, I thought you're on your birthday mood already. I said, what can I do? Even if you leave me on my birthday, I'm still gonna be okay. So I should check SP 500. I think that is kind of aligning because I have one of my students right now that is getting on board on my personal mentorship. Her goal is just for me to um, tailor the market mastery course and strategy on SP 500. It's crazy, and you're just bringing it for me to look. So I'm going to look at XP 500. I'm going to look at US 30 as well. So you guys write these currencies. I'm going to look at 5 currencies within the next couple of maybe 15 to 20 minutes, and we'll see how we're going to make money from them. Does that make sense? Put sense on the chat. So yeah. So for those of you here right now, if you guys want to see the analysis of the live trade, just join on YouTube or the link to join. But having said that, that's my time with you guys. See you. Bye-bye. Okay, great. So the most important thing in, am I sharing? I'm already sharing. So I'm going to start with gold. Beautiful. So last week, Tuesday, how many of you here last week, Tuesday, I told you this market was going to buy from you? Okay. How many of you made money? So how many pips did this market did already? Because what I told you, when it buys, the next uh level, which is supposed to be here, was supposed to be your TP. On gold, you don't actually even have to go that far. You're supposed to take your first TP1 because this is what change of character. So this is your first TP. That's why I put this mark. This is already triggered and done. So this was the retest of this area, the retest of the shift. So this is the shift. This is actually the rate. This is the mitigation point of the previous point of interest. And raided, created a sheet, broke the sheet, retested the sheet, closed as a bullish sentiment, and voila, market has done quite an impressive move on the upside. Okay, what's going to happen here, right? I perceive on gold. So let me give you what I'm looking at on gold. Let me take this out. Is it going to go up? I don't know if it's still going to continue up, but let's do this quickly. So I'm on the 1 hour time frame, and I'm just going to box this. Yes, there is an overall for this market to keep going up, but there's a challenge here. If this market doesn't break where it is right now, so we have a high here, we have a low. Okay, so we kind of have a box in the market. If this market doesn't break this box, okay, I perceive market is going to drop down. Market drops down, breaks this level, retests this level. That's a change. That's a change. It's change of direction. Okay, market is going to pull down. And if it pulls down, then this is going to be a TP level. Until this market breaks this area, okay, retest this area, I fear we may not be going up. So this is actually, I would say, accumulation. This may be manipulation, and this may be continuation. I don't know, except this market breaks this level, comes into, now there are other ways this market can trigger. Yes, there is not a gap here, okay, but there's a gap here at the moment. So there is a fair value gap here, okay, that market may come to. So if market breaks this area, expect a buy, but if it doesn't break, expect a sell. Okay, so that is what's happening on gold at the moment. If this market needs to continue to shift on the upside, you're going to see distribution. Okay, there's going to break of this area. So if it breaks this area, it's going to come back to this area, then distribute up. That is actually an analysis on the buy. So if you want to buy gold, you can't buy now. You have to wait for a certain criteria. So market has accumulated, market has kind of manipulated. Now that manipulation is going to be valid if there's going to be what momentum on the upside. Okay, then we'll have a retest, then we'll have distribution. So, and that all complements the bullish run. The bullish run is to take the market back to where it's coming from. Okay, by the end of the day, I want you guys to also see something. So gold had what? A strong point of interest mitigated. Okay, now gold has created a shift on the downside. This is our previous low. Okay, this is our what? Present high. Yeah, these are previous swing high. These are present high. Now you want to watch this. A shift has been created. If this market comes to this area, okay, this is our major sell area, then this shift becomes valid. Okay, then we're going to be seeing sells. When I say major sells in the market on gold. So irrespective of what we're seeing here right now, the push on the upside, it's not that far. This is the best we can get. Okay, but on a bigger time frame from the daily into the weekly, the market is setting up for a major sell. So that is why when I give my areas for you to get in the market, I'm always telling you what's your possible exit point. So this is your possible exit point. Okay, so and how is it going to get up here? So it may get up here, it may not get up there. But if it's going to get up here and you want to buy gold, gold is a very, very distributing pair. Let it break this area. Okay, if that happens, then it leaves a gap. That's a fair value gap and a floor. So a fair value gap plus our floor will be a major support for the market to what? Demand up. So that is my analysis on gold. I hope you guys get that. So there is a buy opportunity if the market breaks this area on the upside. So if it breaks, just leave it to break. Then allow it to come back. Then you can buy. Okay. Now, Kendrick, can I buy this? Yeah, it may actually break, retest this area and go away. So, but my major take is when it leaves a gap, it always wants. That's when you're going to have a beautiful, probably a more robust move on the upside. Okay, so what's probably going to happen? So I give you a variation. So the market is here right now. It's going to break here. It may retest and move, but the first retest is not going to be the best because why? There is a gap, an imbalance below. So most of the time, what the market does is excuse me. So most of the time, what the market does is it moves on the upside, okay? It's going to retest this area, but it will not retest immediately. It's going to distribute down to what? The gap, balance the gap, then break the area, retest it. That's when this is going to be valid. Most of the time, that's what it does. So you may wait for what? The stretch on the downside. So if you feel like you don't want to get in on this area, okay, because at the end of the day, this market may hit, come down, retest. So, but if this happen, wait for this area. Okay, so this could be an entry after it hits and move away. This could be an entry after it breaks again. So a double break on this area is going to be a good push on the upside. Does that make sense? Okay. So that is and it looks like it really want to break. If you guys got that, I got that, put 5 on the chart. So that's wow, you passed your funded account with that analysis. Who's that? That's Wilson. Whoa, that's beautiful. You mean the gold? Wow, beautiful. That's massive. Congratulations. So this is priority number 1. So let's look at Euro USD. Whoa. So there's been a point of mitigation on higher time frame. Okay, so I told you guys one of the things you guys are going to see, okay, on the shift. Let me just give you guys. Oh, sorry, I stopped sharing. I wanted to share. So this is what the shift strategy looks like. One of the things you guys have to pay attention to in the shift, market shift or market shift approach. So first is, so let's look at our bullish structure. Okay, we're definitely going to want to see excuse me. Would have this is what we call POI. Okay, it's called point of interest on a higher time frame. So if there is a higher time frame point of interest, it means either this is going to be a supply level. You want to wait. There's going to be a good value shift when the market. So this is a higher time frame whatsoever. So market is coming up. However, it's going to forget how I'm drawing it. So if there is a mitigation of the previous point of interest and a switch of sentiment, and that is taken away, okay, by price action, that is called a rate, okay, or liquidity sweep. And market comes down to create a low below the previous point of interest. That's a good setup. But the setup is only valid when market structure aligns. So what's market structure aligning? Okay, you want to see a new lower high created. If that happens, okay, it means this area is a valid what? Shift. Okay, so becomes a new swing low. So what are you selling? You are selling the new swing low of a shifted market. So that is basically what the shift looks like. You want to first want a point of interest to be mitigated. Okay, then you want to have, so this is the mitigation, this is the switch of sentiment. It means there's a respect, something is there. But this is a good range for the market to sell. The big boys in the market doesn't want you to just gain this. So the first thing they will do is to take you off your stop losses. And when that happens, market is going to come the direction. But it's only going to be valid when the new sell structure is created, because all these are bullish structures. So a new a new structure has to be created before we're going to have a good sell. And most of the time, you want to watch out for this. If the market builds up, okay, creates a low, goes back up, you want to watch out for what? This change of character. So if you look at what I just showed you here right now, this is what the swing low of the market, and this is the swing high, because what, there's a break of structure here. Now a new swing low is created, but there's also a change of character here. Market is always going to be valid when a new lower high is created and there's a change of character. So you can see this area had a change of character. And after the change of character, you are not selling this previous low, price action. That is when you're going to have a complete shift, a better and good shift. So let me give you guys a demonstration of what I just said. So makes sense. So let's look at this move on the upside. So if you see Euro USD on the 1 hour time frame, you're going to find out that first we had what? A point of interest on the higher time frame. This is the liquidity that took this market up, and this is all of the range. So this is the range of the market, okay, between here and here. Now what did this market do? First, there was what? A point of interest mitigation, right? Okay, so it respected it. The next thing, there was a rate of that character. So there was a rate. So after the rate, now this market didn't really move as per break and shift, the type of shift I would want. Okay, but what is the quality of a shift? A new, so this was a low, this is a what? A higher low. Okay, so this was a shift. All right, so this was rated, the shift was created because why? That is the high. So this shift is valid when market broke and created a new low. So you can see that in this market already, there's been kind of like what? A shift on the upside. Where is my... So you can see that the market is inclining. So that's valid. This becomes a valid shift. So when am I going to buy it? Okay, it has to break and retest this area. But in this market right now, we didn't see a break and retest on the maybe if we switch to 1 minute or 5 minutes, we're going to see a break and a retest. But that's not what I'm looking for. Now, this is the valid shift in the market. But I wouldn't have loved this shift because it's gone too far into what? My distribution. So what did the market do? Break, retest, close above, and it's moving. Okay, so that is what I am talking about. You have to wait for a higher time frame mitigation, point of interest. So if you look at this right now, this is a point of interest. Okay, so if I'm looking at this market as an hourly move right now, point of interest has been respected, but there has been no rate. Okay, so I perceive this market may still move. Okay, sometimes it will mitigate and move. Okay, it will mitigate and move sometimes, but most of the time the big moves will happen when it mitigates. Okay, and so if this happens right now, it means our range is going to be, it means it's a short time range. Okay, but if this market comes and hit this area, two things have happened. One is there is mitigation. I'm analyzing EU right now. It's next pair. Okay, there has been mitigation. I'm looking for a rate. If a rate happens, then I'll be looking for the new shift. So that's one of the things I'm waiting for EU right now. If that happens, we have a good range. Okay, we have a good range. And if that happens to hit this area, then we'll have a good range. It means we can be selling up to this area on EU. So that's one of the things I'll be watching out for on EU. Okay, it's just happened. A point of interest has just been mitigated. So let me take all of this out right now. So the first thing is a point of interest has just been mitigated on the higher time frame, 1 hour. Let's look at it in the 4 hour. Even on the 4 hour, that's a point of interest mitigated. Okay, so you can see that on the 4 hour market is just happening. So if this is rated, that is fine for us. Okay, the good thing is if that rate comes to mitigate this area, you have a double strategy there. Okay, so Kendra, what are you looking for? I'm looking for market hitting here, closing below here, coming back here, creating a structure. Then this is going to be my shift. This is what I'm looking for. Okay, and if that happens, then I'm going to sell that area for a sell. First TP is going to be here, overall TP is going to be here. Does that make sense? So that's what I'm waiting for on Euro USD. Plays out on the 4 hour, fine. If it doesn't play out, look out for 1 hour or smaller time frame. Does this make sense? So this is EU. You can actually take a screenshot. Okay. If you notice, most of the time, okay, most of the time, whenever the market, so let's look at this market that moves. Again, you see this market, you go back in time, you're going to see a higher time frame. So I just want you guys to understand something. So there's a mitigation of a higher time frame. If you look at this market, Okay, the market came all the way. Let's see. Yeah. So this is a point of interest that took market. So you look at this bullish range. Okay, market came and this is it raided it. It didn't even mitigate it. It raided it at the first. The first was a raid. So after the raid, we had what? A low. And when the market always want to make a major move, it will raid the first structure. So this is the first structure that was created when market came down. The first thing it did was take it out. Okay, what do I need? I need a shift above my previous what? Swing low. So this is what? This is a shift because this was the previous low. A new low was created. What did you see market do? So first is when I tell you guys to just pay attention to this, don't just look at a trade because you want to trade. Look at the trade because of what it is doing on market structure. So this is a swing high. This is a swing low. What happened here? Market changed character when it took away this and created a shift. And whenever market breaks a change of character, it will come back. So if you look at this market, it broke, retested, moved. Okay. But it makes sure it came back to this area. It always does. It does. This is one of the characters of the market. Okay. One of the characters of let me take this. One of the characters of when the market have a strong bearish push to create a structure, take away that structure, do a change of car. When this happened, this is called this leg that broke back to this low. Okay. And create what we call now a bullish structure. When this happens, then this is going to take it up. You see this? It's going to take it up. Structure, break of structure. That's so your major shift was here. So despite the fact that I'll be giving you area of a buy as strategy, one of your responsibility is to see the relationship of market structure to that strategy point. Okay, there is always a break of structure. There's always a change of character. If these two things doesn't happen, your shift is not going to be valid. And there's always going to be what? A shift of trend. Okay, so if you want to swing, you have to watch out for a shift of trend. If you want to have a day trade, watch out for a change of character. If you want to have a scalp, you can just look out for a shift. So in all of this, that is why it's so important to pay attention to the market structure training. That's what I'm doing. I'm not just teaching you, okay? If not because of my birthday, I'm putting together. I was supposed to have done. I've done all of the course on the market structure. It's ready. Okay. I just need to I'm busy. Really going to be busy. I'm not supposed to even be out today, but I believe what I'm going to do maybe on the 30th or the 31st, but I believe first week. Oh no, before first week, I am going to release access for everyone who want to be part. So this is one of the things I'm going to be doing. So the first layers of people who really want to learn. How many of you think it's very important to learn market structure now that I'm showing you? Because everything you're going to see for every major move you want in the market, okay, I could go on and on. All right, you're going to see something. So if you're looking at this range, okay, market before market bought up, what happened? Point of interest mitigation. Don't play. Okay, what do you see? Point of interest mitigation, right? What happened next? Raided. What happened next? Shift was created. What is a shift? A new high, okay, a new swing high that is created above a previous swing low. So this is a previous swing low before the raid. So if that happens, what do I need for this shift to be valid? A new swing low will be created that doesn't break, because if this market takes away this, then it's no more a swing low. So this is a swing low because there was no break of character. So now what happened? It took this away. So there is a break of character here. What I need is just a retest of this point for me to buy. You can see all of this. Look at this. What happened next? Market broke, retested, closed above. That's what you're looking for. First TP is here. Overall, it's going to be here. Did the market get there? So for every major move you're going to see the quality of a point of interest mitigation. Okay, there's going to be a rate of that mitigation. There's going to be a switch of sentiment. There's going to be a shift created and a value shift before you're going to see what break and a retest. So these are the things that I am just putting together. So you need to understand market structure, range. I've done different videos, but what I did is I want to take it home. I did a comprehensive course. Even a baby trader can understand the language of the market. So you guys don't just come into the market and just look for sentimental analysis or support and resistance. There's something beyond you and I in this market that if you study, something is happening in this market. I don't know if I have time to show you guys right now. Something's happening right now. You know, a lot of people don't pay attention to monthly analysis. Many people lose without understanding the pain of losses. I do. I've lost in the market and I understand the pain of losses. Okay, so now I lose with fun because trading is a game and it's a game of relationship. The more you know your spouse or the girlfriend you're trying to date in the market, the more you have a fair chance that they're going to say yes to you when you ask them out on a date. Okay, so but if you don't know them, you just want to bully them because you have a fine car and you have money in your pocket. Some guests are not cheap. All right, so something is out. I don't know if I have the time. I'm trying to read myself right now if I have the time to show you. For every major move, one thing must happen. Okay, so this was a major move, right? So watch this. There is a point of interest mitigation. Okay, there's a rate. After that rate, see this high. Structure has to change. What is the structure that changed? A new low was created. Okay, a new low was created that was below the previous swing high, right? On this structure. So all of this was a rate. What happened? Market broke it. How is this low valid? A new high that is created that makes this market what? A downtrend, a lower high. So that validates this. What happened? Broke, retest. If you're looking at this range, what is this range? So this is a lot of people don't know how to target TP. I did something, was it last Tuesday? You can actually know where your market is going based on the range you selected. A lot of traders are trading today. Now, let me make this bold. What I've been doing over the course of 2024 is not make you make money. Okay? That's not the goal. A lot of students are not making money in Forex because they don't understand. They know how to trade, but they don't understand trading market. Okay? If you know, I said something, I don't know if it was an open call. Let me reiterate what I said in that call. Was it an open call? Yes, on Monday call, was it open? I don't know. Okay, kind of open. I don't know if it was open. Can't remember. But let me show you this. If you start a race that you don't know where you're running to, you will run anywhere there is an open door. True or true? And apparently, you are simply running to nowhere. Do you agree with me? If you do not know where you are running to. Do you agree with me? Let's put 100. Let me know what, if you guys get what I said. Okay? Did you guys understand what I said? Put 10 in the chat. So let's say you started a race and you don't know where you're running to. You would always run wherever there is an opening. So you keep running without a destination. Okay? And most of the time you would run and you get tired and you will stop running. Do you know why a lot of people quit in trading? Because they've been running and there's no destination and they got tired. And the reason they got tired, because for every race you start that doesn't have an end game, you're going to what? Run out. So before you started, you already finished. So the game of trading is a game because why? You are trying to duplicate what you're finished. So before you started in the first place, you have where you're going. A lot of people are trading today without understanding where the market was coming from and where the market is going. So they just run into the market without understanding the destination of the market. That is why some people have good trades, but they don't have good finish. They get into good analysis, but they exit too early because they never know where that analysis was running through. How many of you feel what I'm saying right now is true? You have exited the market just to come back a week later. That market did, after you left, it did over 200 pips. But you only exited at 20 pips. And after you exited, you ran into other market that have taken that 20 pips from you. And you get frustrated and you think something is wrong with your strategy. No, nothing is wrong with your strategy. One thing is just wrong. You don't know where you're running to. So one of the things I'll be doing over the year, because of the year, I want to help traders know where they start and where they finish. You can actually know where the market would eventually get to. Not 100%, but most of the time when you document it, I can show you over and over. If I take the next 6 hours showing you, I can backtest this market and I can show you through market structure a range. So whenever the institutional traders target a market, they target a range. Now we trade based on support and resistance, which is childish. Okay, and I've told you, I believe you guys, I've given you proof. Yeah, we trade based on support and resistance, which is childish, and because that's how they want us to trade, support resistance. Okay, oh goodness, God, thank God I've grown. Okay, now the most important thing, the starting point of all analysis is your range. So your range is like your destination. I want to run 100 meters, I want to run 200 meters, I want to run 300 meters. When you know that from the beginning, you're going to be safe in this market. So just to close with this, I still have analysis to look at. If I am analyzing this market right now, so I just gave you guys this and the market sold. Okay, ladies and gentlemen, now, I didn't know this market was going to sell. How do you know where this market is going to sell to? What is this range? What brought this market back? Okay, this is the range of this swing high. It means this market has the capacity to come all this low. Okay, if I was buying and this is my point of interest, forget, see, they tell you we are conditioned to trade with the trend because the trend is not your friend. But the best traders are those who trade after the trend, not with the trend. Because when you're trading with the trend, you are a slave to the trend. But if you can identify, okay, what is the end of the trend, then you can switch the trend back. There's always a reversal in the market. There's always a switch of trend. There is always a retracement. The best traders are the traders who know this end point of every trend. So how do you know? You know the range. What range brought the market to where it is right now? So these are part of things I'm adding to market structure for you guys to understand. So if I am buying this market, this is the range. This is the range. If I'm buying, this is the range of this market. Okay. If this is my higher point of interest, this is the range. It means no matter what time frame I am looking at, as long as this is my point of interest, I shouldn't exceed buying above this area, because why? That's my limit. That's the elasticity of the people who bought this market and ended. That's where they ended. If you take it above that, you are suggesting. Okay, if I take this market, now in this market on a can you guys hear me? The market fainted. Okay, my internet switched, but I'm still online. Okay. So why am I showing you this? Because I want you to know when you're trading, know where the market is going to, so that you can go eat your food, go do your work, and you just come back a week later and you see that your market manifests without you looking at it every day. Know your range. Okay. I need everybody to put on the chat, know your range. That's one of the things you're going to know in this year. If you trade with me, I'm going to help you more stable to knowing when the market start and finish. Okay. So right about now, hope I didn't clean the analysis. So this is where we are. Okay. This EU right now. I finished analyzing EU, right? I'll start again. So you guys wait. So I showed you guys that this was the range and the market was going to come all the way down here, and it did. Okay. So let me just fast forward that because of time. I'm conscious of time now. So if you look at EU, right? What is that? Okay. So if you look at EU right now, there is a point of interest. Okay. That's the only thing I'm interested in. There's a point of interest. One. Now, this point of interest, this is the range, is very poor. This point of interest is larger. this is the range, it's richer than this. Okay, so I do know, but this point of interest has been mitigated, right? The next thing I am now looking at, my first tip is going to be here, then I probably want to take this range down. Okay, so if this has mitigated this and has not rated, I'm curious, what's this market trying to do? So let's look at it from a smaller time frame. Okay, so a smaller time frame is just a one. Okay, good. So let's look at this right now. We have this. So this market will not cheat you. You just have to look at it the way it is. So if the, oh boy, this market wants to cheat me. All right. So there is a higher time frame. So aside this, there's a high. This has mitigated, okay, and has rated to the previous high. So this rate is valid. So what am I looking for? So you guys watch out for the, if this market refuses to come to this high, which has a lot, maybe I need more money from this market. That's why I'm looking at this, but the market may actually be going back from here. Okay. So what am I looking for? If this doesn't go back up here, I'm going to watch out for a low. Okay. So market is already preparing. So if market gives me any low and come back and doesn't take away this high, okay, and come back down, then this is going to be my value shift. I'm just watching out for a low. So that's what you're going to be watching for, okay, for a sell. And it's going to be short sell. I don't like the sell, okay, but watch out. That is EU. And the last trade is going to be GBP USD. Quite an amazing trade I am looking for to play out. All right, I am so waiting for this trade. I got in on an early entry, took me out, and I know it was an early entry. So can you guys see? I prepared this trade for you guys. I think I analyzed it on Monday. So there is a strong point of interest on the higher time frame, which has a very powerful range. Okay, I perceive that this market wants, on the monthly, there is a trend, a downtrend. So if you guys have been thinking of buying or selling GBP USD over some couple of days and it's not been selling, I will show you why. Okay, because this is one of the things I've been able to understand in the market. When you see the market from where it's coming from, you're not going to be greedy. Okay, what do you see on this market on a higher time frame? A downtrend, right? So I told you guys something. There's going to be what? A point of interest mitigation. There is a point of interest here that gave us what? This range. Was there a mitigation yet? Yes. Was there a mitigation yet? Yes. So there was a mitigation and there was a raid. After the raid, what happened on the monthly? A shift was created. Okay. After the shift was created, a low was created. So we have a point. We have a low. Okay. We have a new low. After the shift was created, what happened? Broke, retested, close. What is happening to this market right now is a monthly shift on the upside. And let's just check it. If we say this is the point, this is the range, okay? This market may drive all the way up here on the monthly. So when you see market keep going up, this is why it's going up. But it has something to contend with. Okay, what is that? There is a major trend and there is a range here. So there is a point of interest here. This is the neck of this trend. It means it has a lot to do with pressure. If it breaks this neck, then it's gone. If it doesn't, then you have a very strong chance that this market is going to drop within this area that it is pushing to. So there's a point of interest, there's a point of interest. If this point of interest is taken out and this trend is broken, boy, that's a bullish market activated. But what am I looking at? There's a neck of a trend, which means there's a reversal point in this market. So if market takes away this, market has taken away this, it has rated it, closed, but did not continue. It continued up, right? So I'm just looking for market to, you know, when you're preparing for bushmeat. So I know if market gets here, it's going to sell. My goal is not just to sell here. Okay, my goal is now I'm watching for the market. There is been, let's see, for us. I think I'm going to do this SP500 and I'm done. I should be out of here. Oh boy, I'm already late. But okay, good. So when you see this level right now, The only thing holding this market was here. Okay. And the moment it got here, took away this level, I perceived that market was going to get here. Okay. So market is still going to push up here. But if it doesn't, then you're going to see market. My sales are going to be around this area. I'm not going to sell anything around here. Okay. Except this market is taken out. This liquidity is yet to be taken out. If it doesn't, for every major move that will happen, there's going to be a sweep. If there's no sweep, it's not going to be major. Watch out for that. So yes, there's been a sweep of this area. Okay, so there's been a sweep of this area and I like it. So I was looking for this market selling, but it's not selling yet, so that's fine. So the only thing we're seeing right now is small move. So I am telling you, market has to get to, did it get to the psychological? It already hit psychological area, but it has to get to this area for you to have a good move. So wait. So if market gets here and it rates there, fine, you're going to have a good sell and the sell is going to be massive. So I'm just waiting for market to get there. If it doesn't, it's fine. I actually saw this area, but it didn't move quite. It didn't even give me TP1. Okay, it did. Yeah, it was just, it almost kissed TP1, but it didn't. And it flashed it. Okay, it flashed TP1, which is when I say TP1, which is the previous swing low. It did, and it went back up. So I'm thinking market is going to this area. So if market hits this area and what takes it out, I have a good trade on GBP USD. If it hits. Now, if it doesn't hit and it's coming back, I don't have a sell until this market closes below this area. This market has to close below this area, create a shift, then create a new high that is not above this before I'm going to have a sell. So this is how I do it. Market has to come low, create a new high, okay, down. Then this becomes my shift. I can sell this area for a massive push on the downside. That is what I'm looking for if the market does not rate this area, doesn't mitigate this area or rate. Does that make sense? All right, put sense on the chat if you got that. So market is preparing. Okay, I would have told you guys something, but not today, maybe Friday or Monday. Okay, about a monthly. Okay, I already gave you guys an idea. Monthly shift. So as much as I'm looking for a sell, okay, that sell is minimal compared to the bullish range on the monthly. So don't be greedy. So I know how to switch. So S&P 500, that's the only request I got. Boom. It's simple. One of the things is just like trading is like installing a program. Okay. So first is look at it on a higher time frame. What are the major point of interest? All right. S&P 500. I think I analyzed this on the last time. Okay. So first is there's been a point of interest. This is not a mitigation. This is a rate totally. Okay. This is a total rate. This is a daily, right? So this is the strongest point of interest on the daily. Let's look at it on the weekly. I see nothing. Wow. Market is really off the chart. Market is really off the chart. Market has done sweep, mitigated sweep. So this is the highest point of interest now. And there's been a switch of sentiment, so market should be selling. So if that happens, it means this is your new swing high. Okay. So as now that we've seen it on the higher time frame, you switch it to a lower time frame. So what do I have? Good. So this is the swing high. Okay, this is my previous low. This is supposed to be my shift. Okay, but market has not closed. Break, retested, did not close. This is where you have a conflict. But there has been a shift, a valid shift. There's been a change of character. So this market will sell eventually. Because why? So there's been a change of character here. And market went back to kiss. So one of the things you guys need to know, there is a fair value gap when market dropped down between here and here. Okay, and that's what market came to do right now, to take that fair value gap. So since that is done, this could still validate your sell. Okay, because this is the shift of the market. Since market shifted, it has retested but has not closed below. So if market closed below, you can have a sell. Okay. On the downside, take your first tip here. Don't be greedy. So this is still positioning for a sell, and the overall sell, you saw what I showed you, it's a crazy one. So this is a sell, okay, on this market. This is where you sell. You have to allow the market close below. You can do two things. You can allow the market close, retest again, which makes it fresh, okay, and close and sell, because this is the shift of this market. This candle took away this, and it came back to a fair value gap. So this is the leg that shifted the market. Everything here right now is fulfilling what market structure shift pattern. Okay, so watch out for a sell on S&P 500. It's crazy. It's going to be major. That's why I asked, because the market's looking strange. Yeah, the market is looking strange because there's a timeline between. So let me give you guys. When you're day trading, sometimes the market can day trade for a month consistently within a range and not exceed that range. But at times in the market, your daily candles are going to be overwhelmed and they're going to enter weekly and monthly analysis. We're in a timeline where the daily is transitioning into the weekly and monthly. So imagine a monthly analysis playing out and you are trading in 15 minutes. It's just, you just see that it's not completing. It's being taken as, it's being swept. Okay, because why? It is aligned. We're in a timeline where monthly analysis are aligning in your day trading. Okay, I learned this long ago when I know how to switch from forex to binary. At least I've been good. Binary is scalping, so I understand the relationship when a 1 hour candle is intimidating my 5 minutes candle. We are in that timeline where a monthly analysis is intimidating 1 hour and 15 minutes. And a lot of traders do not know how to interpret this. And I just hope I can help that. Any questions so far? Okay. I gotta run. I got some preparation. I got party planning. Okay, so I didn't say that. I got to chill. I'm not supposed to be here, but I love you guys so much to be here today, even to show you. All right. That I love you guys looking at the market, and I want to help you guys look at the market. So the only thing I see is there is gold. So I gave you guys gold. So gold is beautiful. Gold can make you money. You just have to understand it. What? So it actually broke now. It attempted it, but came back down. It means there's a strong liquidity in this zone. Hold on, let me quickly look at something. The highest liquidity came into this market from this area. Okay, there's large volume in this area. Okay, that's why the market went back. The other volume in the market is up here. It's the kind of volume market. Okay, so there's a strong volume. One of the things that can pull this market up is because there's large liquidity in this area in the market. So market will come here and sell down. Okay. Yeah, don't even ask me, Cambry, what's that? Don't ask me. Don't worry. So it's when you stay long enough to learn trading and you take trading as a relationship, you have a lot to know. Okay. So don't forget gold. Gold has a buy pattern and gold has a sell pattern. Just wait for it. Don't tell me that's close. Let me see 15 minutes. Oh, 15 minutes close above. This may actually come and play this. Gold plays out very well on the 15 minutes. So 15 minutes close above, but 1 hour didn't. Which means this fair value gap, let me see, can be triggered on the 15 minutes and it will move up. So there's a fair value gap between, on the 15 minutes, there's a fair value gap. So if it's on the 15 minutes, you have to allow the market come down. So there's a fair value gap between here and here. All right. So, okay, still not bad. Okay, so if market comes here right now, that's the trade. You're gone. The market is gone. So on the 15 minutes, what I won't forget to say that. 15 minutes, if you're trading gold on a 1 hour time frame, you miss a lot of good analysis. But if you're patient enough, you get the best analysis. But gold moves well on the 15 minutes time frame, 15 minutes, 5 minutes, 1 minute. Those who trade gold. So when the market pushed up to break this change of character, so there was a change of character here. This was the first change of character. Okay, pushed up, left a fair value gap here. And whenever market changes character, it tends to come back to those gaps to fill it. And when that happens, that's a strong bullish sentiment. Okay, so watch out for this. This analysis that I said, watch it out. It has happened on the 15 minutes. So if market triggers here right now, so let me put an alarm. Yeah, market triggers here right now, come down. That bullish market. That's if you want to trade here. Okay, but my major trade is break here, retest here, push on the upside. So guys, I love you so much. For those of you who think what I am teaching you right now, you need to learn it and you want to learn it deeper, I am open to making you my student, and I can teach you this thing on 2 angles. I can teach you from afar. So, okay, 3 angles. I'm already teaching you, okay? But if there is a part of you that is not feeling that this is enough, then you come to the other point where you can become a student of our Pewat Nation trading class, okay? Where you can you can have a 3-month plan, you can have a 6-month plan, okay? You can even have a monthly plan, okay, where you could learn to be in the Pewat Nation trading community. I do this almost every other day. Or you could say, Kendrick, I want to be among your students in personal mentorship. You want me to take you on a one-on-one basis, okay? I have rooms. I've created a room for personal mentorship starting from now, okay? So if you want to be part of that, I have a plan I can take. All you just need to do is get to me, reach out to me on Instagram, message me. I'll put you on a course plan for my personal mentorship, direct one-on-one. So this could help maybe those people who have time structure challenge. Or Cambridge, let me be your student. That we are not in the same level, because at my level, I don't think I know how to trade. I'm still learning. Even if I'm a teacher, you never get to you can't know it all. There's always something that's going to be a problem tomorrow. The more you get to find out the possible problems that may arise in the journey of fluency, the more you're actually going to have an obstruction. Even if you have an obstruction, you're going to beat it. A lot of people don't beat obstruction because they never learned about it, because they stopped learning because they were making money. Okay, if I stopped learning because I was making money a couple of years, I probably wouldn't even be your educator in the first place. It's not because of money. Don't stop for money. Money is just a distraction in this profession and relationship or trading. Don't stop for money. Okay, keep growing. God bless you. Sir, the course you create, how can I get it, sir? Okay. Wait out for the announcement. I'm gonna make an announcement on the 30th or 31st, or probably between second or third, second or fifth. Okay. Does that make sense? I'm gonna make an announcement on how people can participate in the course. So the first layer of the course I'll be doing is, it's going to be a one-time course. You're going to have access to all of the material on the market structure, and you're going to have a strategy. But those that will be mentoring one-on-one, they're not just going to have a strategy. They're going to have variation of the different approach to the market structure shift course. So I have about 5 approach. Okay, I've only been able to put out 2. But if you do the course, you're going to get 1. That's if you do the course. But if you do the mentorship, market structure mentorship, it means you join those. I'll be training over a period of 35 days. Okay, I'll be taking, if you do, you're going to get access to at least 3 approach, okay, over a period of 35 days. Now, if you do the coaching that you join, that I'm not limiting anything to you. You're going to get everything that has to do with the remote trading. My journey in trading so far duplicated over a period of 3 months. All right. So you can have, and we're going to narrow it down to one thing: market structure. Everything I know as a trader today is in price action. And this period, market structure allowed me to interpret price action from past, present, and future. And that's the best thing that can happen to you as a trader. for you to be able to see what you have been doing over the last couple of times you've been trading. We don't trade the market, we trade ourselves in the market. So if you do not see your strategy interpreting you, if you cannot see you in the mirror of the market, then you are not yet a trader. You're just someone passing through. You're a visitor, you're an alien, and history will not be of you. So I'll see you guys. So just reach out for any information you want to get. Reach out to the person who's placing on this call. Reach out to me on Instagram. I am Kenry, okay, on Instagram. I am Kenry. It's the only Instagram I have that you can communicate with me. Or Pewa.nation. But do I am Kenry, because that is where I talk most of the time.